Welcome in M25 TV Global News Channel.
To one of their vending machines located all across the country. We will stop at nothing to make you happy, and will drive you happy at Carvana. Investors saw the company's sales had more than doubled from the previous year and its stock value had risen by over 1,000% from a low point in 2020 in 2021. The company claims it wants to transform the way we buy cars. Carvana, in my opinion, is a classic illustration of a stock that, during the early stages of the pandemic, had everything go in its favor and, later, seemed to have practically everything going wrong. What went wrong? Carvana has never actually posted an annual profit, instead focusing on growth. Carvana put money into hiring into new reconditioning centers to fix up the cars that they buy and sell them again. So what went wrong? The company's share price started to fall in late 2021, plummeting by 95% over several months. So what went wrong? Harvard has invested a lot of money in marketing, such as with the large Super Bowl advertisements and similar items. Did I mention that I purchased our car through Carvana, as well as with the auto vending machines? However, they continue to incur significant losses. In February 2021, Carvana's CEO, Ernie Garcia, spoke to CNBC about the company's growth. I think what COVID did is it shifted psychology faster in the direction of trying new things, and so I do think that the business probably has more demand today than it would have had absent COVID. As demand increased, three main things were helping Fue, he said. As the pandemic in 2020 caused the share price really to take off, loan payments. This is a process known as securitization, but unlike others, Carvana offloads its loans from its balance sheet to make a gain up front rather than making a gain over time. At the time, low interest rates made the loans appealing to investors who had a higher risk appetite and were more comfortable with consumer credit. In 2021, Carvana made gains on loan sales account for 37% of the company's gross profit. The cost of used cars was the second factor driving expansion. The third was its online low-contact model, which enabled automobiles to be bought and sold, and the fourth was a global chip shortage that limited manufacture of new cars and increased the cost of existing ones, which benefited dealers throughout the market. Between states, many consumers are drawn to the procedure that Carvana advertises. Since there are no salespeople involved, you can buy a car from the comfort of your living room, and you know your price and the status of your financing. Carvana's platform was perfect for a world of social isolation, and its stock price rose steadily during the pandemic, following the lead of other virtual-focused businesses. However, after the peak in August, when supply chain problems and rising inflation first began to worry investors, the wind began to turn. I believe it began with some sort of inflation scare. They were comparable to other businesses that suffered with the pandemic. High expectations, such as Peloton and Netflix, in a larger growth stock slump. In order to increase their physical locations for inspecting and reconditioning cars, the company announced in February that it would purchase the used car auction business in Odessa, United States, for $2.2 billion. However, the company revealed their first-ever decline in quarterly sales and share value in April. Turns out demand isn't there for whatever reason, or isn't there to the extent that they anticipated, and investors are now more interested in the specifics of the firm because it appears that growth won't be the main focus. The advantages that had aided Carvana's expansion and stock price increase were now working against it. Fears increased that rising inflation and a probable recession would make it more difficult for automobile owners to repay their loans as demand for their securitizations was weakening. Investor interest in growth stocks and demand for consumer loans fell. Additionally, many purchasers were finding used car prices to be prohibitive. According to Carvana, the average cost of their vehicles jumped by more than 30% between January 2021 and January 2022. Customers began reporting problems with getting the titles to their cars, getting the paperwork, and receiving temporary license plates from states they didn't live in the second half of last year. In November, Carvana said it was addressing significant logistical problems brought on by the company's growth and demand. Complaints about the company were growing. Carvana customers began reporting having problems with getting the titles to their cars, getting the paperwork, and being given temporary license plates from states that they didn't live in. As complaints about the company grew, those stories became more and more common in the second half of last year. In November, Carvana said it was addressing significant issues. July saw an attempt by Illinois to ban Carvana in the state because of concerns with titles and registration. When it comes to issuing temporary registration and license plates, the state already established rigorous criteria for the business. At the end of July following the suspension, Carvana received a temporary restraining order allowing it to carry on selling cars in the state. A spokesperson for the company stated that we offer title and registration services at a rate among the top-performing dealers in the state and that Carvana shares the state's commitment to minimizing paperwork challenges as much as possible. Retail unit sales improved in 2 earnings reports in August. The firm said it is focusing on cost-cutting and efficiency improvements. It also stated that it anticipates in the third quarter to sell its loans to financial institutions rather than packaging them into securities. The morning after the announcement, Carvana's stock price rose more than 40%. Carvana's future success may depend on how it manages growth going forward. When companies focus exclusively on growth, they can generate a lot of demand for their product. Then, perhaps, they struggle to meet that demand, and by the time they do, it's too late. A spokeswoman stated that the business is still steadfastly devoted to continuous improvement and will continue to work diligently to improve the greatest car purchasing and selling experience currently available. Here is CEO Ernie Garcia's call to shareholders for the second quarter. Given the change in focus, we are now growing more slowly, but we hope and believe that by being more efficient, we will be able to develop more quickly in the future. Because you have to do somewhat less labor every sale, we'll try to make up for that. Changes in market conditions have eventually had an impact on the auto industry as a whole, but other rival stock prices, including CarMax, have not been as negatively impacted as those of Carvana.
Thanks for watching. Don't forget to like the video, and don't forget to subscribe.